Thank you so much, Chamberlain. Good morning, everyone. Welcome to Business Morning on Sunrise Daily. We do business for just about 30 minutes before we head back to the Sunrise Daily studio. We'll start from the global space. As usual, oil prices edged down on Tuesday as weak Chinese demand offset supply disruptions from tropical storm Francine, and as global oil oversupply risks continue to weigh on the market. We see 4 cents shed off the Brent futures. That's 0.06% this morning at $72.80 a barrel, while for WTI, it's 0.15% shed off that, $68.60 a barrel. And yes, the storm is brewing. Both benchmarks gained around 1% towards the end of Monday's settlement. The U.S. Coast Guard had ordered the closure of all operations at the Brownsville and other small Texas ports. That was later yesterday, Monday, as tropical storm Francine barreled across the Gulf. The port of Corpus Christi remain open, but with restrictions. However, signs of weakening global demand and expectations of existing oil oversupply continues to weigh on the markets. China data was out on Monday. That's the inflation, consumer inflation data, and it accelerated in August, fastest pace in half a year. But domestic demand remains fragile and producer price deflation has worsened. Let's take a look at the Naira. Yesterday, there was an intervention from the Central Bank of Nigeria into the market. And so we see there that inverse relationship at times like this. We see NAFEM opened at 1,593 naira 32 kobo, but gained 1,518 naira 46 kobo. That's for NAFEM. For NAFEX, it's on the flip side, lost about 3 naira, 1,619 naira 95 kobo. That's what it opened at, but closed at 1,622 naira 96 kobo. This, we know, captures the reality at this time, and it's a good thing that there was a gain at the close of trade. It gained about 12 naira on NAFEM, that's 0.81%. But I mean, I guess it was because of the intervention of the central bank, and there's anticipation that there'll be even more central bank intervention. We know that as at Friday, there was that circular for the BDCs to also get about $20,000 each for all eligible BDCs from the central bank. So a lot of intervention coming from the central bank at this time. Now, we know that President Bola Tinubu has just concluded a visit to China, where he met there, and then we saw a whole lot of MOUs signed, waiting for the implementation of those MOUs, I think, would be a good way to capture it. But back here in Lagos, the consulate China of the People's Republic of China also thought it wise to meet with the private sector and see how they can build on some of those agreements. That meeting held in Lagos. The Consulate General of the People's Republic of China in Lagos has worked with the private sector to organize this symposium tagged the Lagos Forum. This is to further discussions and implementation of agreement at the recently concluded Beijing summit of the Forum on China-Africa Cooperation, which highlighted the roles played by President Bola Tinubu of Nigeria and President Xi Jinping of China during the summit.
The recent Forum on China-Africa Cooperation FOCAC has ushered in a new era, marking a significant upgrade in our partnership to a comprehensive strategic collaboration. This evolution promises to unlock unprecedented opportunities for growth, development, and mutual prosperity.
Past gains, future benefits come for both countries.
The practical cooperation has been highly fruitful. China-Africa trade volume has increased from $10.5 billion in 2000 to $282.1 billion in 2023, nearly a 26-fold increase. Direct Chinese investment stock in Africa has grown from less than $500 million US dollars in 2000 to over 40 billion US dollars today. Over the years, China and Africa have constructed and upgraded nearly 100,000 kilometers of highways, over 10,000 kilometers of railways.
Even more collaboration because of the geographic position of Nigeria, especially Lagos State.
The country has the potential to become the manufacturing hub for China, for West and Central Africa. We believe we have the geographical location in West and Central Africa and the facilities, some of which was also built by the Chinese, the Lekki Deep Sea Port, and all the other facilities that makes Nigeria the ideal location for manufacturing and logistics hub for Chinese businesses in West and Central Africa. A lot of multinationals already has Lagos in particular as their base for West and Central Africa. And we always tell investors coming to Nigeria when they come to see us at LCCI that Lagos is not just about Nigeria. Lagos is about West and Central Africa.
The forum concludes with a renewed commitment to foster stronger ties and explore new opportunities for collaboration between China and Nigeria, paving the way for a prosperous and mutually beneficial future. Now, let's take a break. It's Commodities Day. We'll talk about it because we know, of course, the new price of petrol is still biting hard. I wonder how long it will take for us to adjust to it, but we'll talk about that, especially as it has to do with happenings in the commodity space after this break. Just stay with us. Welcome back to watching Business Morning on Sunrise Daily. We're discussing commodity now, and we know that, of course, the cost of energy feeds into every commodity. Let's have this conversation with Victoria Momo. Victoria Momo is a senior analyst with Financial Derivatives Company. Victoria, good morning. Welcome to the program.
Good morning, Ini. Thank you for having me.
Great. So would you say that this new price of petrol, has it been captured into the price of commodities, especially food commodities? Has it been captured at this time?
Yes. So, energy prices actually play a significant role in driving inflation in Nigeria, right? And this is because it has spillover effect on transportation costs, logistic costs, and to a large extent, prices of food commodities. So basically, we've seen a 50% increase in the price of petrol. And that, of course, is expected to weigh on consumer disposable income because that means more spending on energy. And to a large extent, we've also seen like some prices actually, responding to the increase in energy costs. And from what we have here, we've seen the price of peppers actually increasing, onion prices actually increasing. On one hand, we have, the harvest season and the fear of imported substitutes coming into Nigeria actually, pushing some commodities, lower, like making some commodities actually decline. But on the other hand, we have, the impact of energy costs on these commodities, and we are beginning to see those commodity prices increasing. And it is expected that these prices would remain, elevated in the near term, and it would contribute to inflationary pressures in the near term. Do not forget that we also have other strong inflation stoking factors that would actually drive inflation this, month and subsequent months. So we expect that generally prices will increase, and the fact that energy prices have risen, it's, renewing inflationary pressures in Nigeria.
Yeah. So, FCCPC did say something about consumers being exploited. Is there a way to measure perhaps the percentage of increase in energy and how it translates to commodities? Do we have a fair measurement of that?
Yeah, so basically we have so many ways that the energy prices can actually filter into, commodity prices. And like I said earlier, we have the transport cost. So if there's a 50%, like the 50% increase in energy prices would actually translate to increase in transport costs, and we've seen transport costs actually increase, across board. We've seen, from 50% to 100% increase in transportation prices since the hike in petrol prices. So this has filtered into the prices of commodities, and we've seen like some commodities actually increasing by so much percent and expected to increase further by that same percent of the increase in energy costs. And do not forget that there are other structural issues that are also contributing to the increase in prices of food and other essential commodities in the country. So it is expected that this will continue to weigh on consumer disposable income. Don't forget that the 50% increase is expected to shrink this consumer spending by as much as 5 trillion naira, right? And that means that government spending on subsidy would actually, reduce as much as that. So basically, consumers are stretched, and this could linger for a while.
What do we see in the next coming days or weeks? We have started noticing supply has increased. That's talking of petrol. Dangote has told us it's not coming from them, so obviously it's imported, which is a problem. But can we say in the coming days, as supply increases, can we say kind of a balancing in the pricing that will seep also into the commodities prices?
So basically, there are three things involved. There is the supply side, there is demand, and there's also pricing. So whenever these three are in equilibrium, it means that everything is going well. But in this case, in the case of petrol, we are seeing that everything is in disequilibrium. We have supply on one hand, we have demand, stable on the other hand, and then we have the pricing that has just been recently increased. So there's like some sort of disequilibrium, and that has also, contributed to the fuel scarcity that we've seen in the recent times. So basically, we have NNPC that is the sole importer of petrol into the country, and the NNPC is not, as said, that it's not really sustainable to sell this petrol at the price that is below the marginal cost, although that is currently what is happening. And then we've seen that there's some element of subsidy involved of that particular, because the actual price of petrol is supposed to be like around 1,000, above 1,000 naira. And then we've seen that the Dangote refinery has come into play, but there is some sort of restraint from the Dangote refinery in supplying this PMS into the market, because as a businessman, it's difficult. It's not rational to actually, supply a particular product at a price that is below your marginal cost. So we've seen that dynamics actually play out in the petrol market, basically. Although Dangote supply of fuel is expected to ease the pressure on supply, one, and also reduce, fuel scarcity in the country. But in terms of the pricing is actually determined by, first, we have the global international oil price. So if there is an increase in global international oil price, it will definitely, impact the pricing of the product. And also we have the foreign exchange, that's the naira, that is also that could also contribute or cause like a change in the pricing of the commodity. So basically, we expect that NNPC and Dangote will come to an agreement regarding the pricing of the products. And one, the quality of the product is guaranteed, supply is also guaranteed, but pricing is very, very important. So we expect an agreement to come from both the Dangote refinery and NNPC on the pricing and who would bear the burden of the subsidy.
Yeah, certainly we do wait for that agreement to be for the good of the country and businesses. Thank you so much, Victoria Momo, Senior Analyst with Financial Derivatives Company.
Thank you for having me.
Let's take a breather. We'll be back. Welcome back to watching Business Morning on Channels Television. We'll take some steps away from commodities, at least food, and see investor sentiment amidst all of this. Victoria did mention there about the disposable income of Nigerians, purchasing power. What's happening? Are people really looking at the way of investment? Let's have this conversation now with the Chief Executive Officer of Finance with Mukhtar. Mr. Mukhtar Mohammed is right here in the studio. Mr. Mohammed, good to have you in the studio. Good to have you live.
Thank you for having me live. It's a pleasure to be with you.
Thank you so much. So we're just talking about how this new petrol price is affecting commodities. I mean, you don't have to search far. We know that because of transportation and all of that, it seeps into prices. But talking about disposable fund, which is what is used for investment mostly. People will eat first and travel before they think of investment. So I wonder is it in the early days, have we seen the impact of this new price on investment and investor sentiment?
Well, we've been seeing the impact in the equity market for a while now. Retail investors are practically not there any longer because the the high net investors are still there, but institutional investors are still there, but the retail investors seems to be losing out. Even if you look at the current right issue, public offer, like you said, a lot of people, if you don't have money to eat, how do you want to invest? So the right issue, the public offer, so you're not getting any of those investors playing the market now. So
is that affecting the banks? They're recapitalizing now.
Yes. Oh well, it's affecting the banks in such a in a little way, because before the CBN came up with the recapitalizing plan, I mean, I said in one of your programs that it will be difficult for retail investors to be able to take their rights. Most of them have built it over time, maybe to about some certain amount, and you're telling them to come and take it over twice or three times the amount and the current economic crunch. So 90% of them did not take their rights. So most of those rights will not find their hands into high net investors and foreign investors.
Is that why we saw extension? I think about 2 of them had to extend their dates.
Well, I think for extension, it's depending on what strategies you are using. We saw extension from Fidelity Bank, and we are now seeing extension from Zenith Bank. For Fidelity Bank, after the extension, you saw they said they were oversubscribed. For Zenith Bank, we just saw that.
It was just on Friday.
Night. We just saw it yesterday night that they have extended their own to September 24th. So we'll watch and see how that play out. But for Fidelity, those extension was built. Maybe there are a lot of investors that really want to take up more of the offers and they want to have time for them. Then they're also thinking of getting more than what they expect. I think they are getting more funds than what they expected.
So apart from the markets now, there are other funds and asset and liability companies that help to manage funds. I think they call it consolidated funds and all of that. I wonder how investors are looking to them. Are they making it at this time?
Well, investors are not really looking at them because, again, it's crunch time for everybody. So you tend to look at what are your strategy, or who are your investors, what are you trying to do, what type of investment are you trying to do now. So as it stands now, I think it's really not a good time for most consolidated firms, investing firms, stockbroking firms. So a lot of challenges. Some of them are going back into their liquidity to be able to even throw the market. And again, we don't have big players coming to the market. Foreign investors are not there.
The result from, I think, was it the first half showed that a percentage of foreign investors are out. So it's more of the local investors.
So it's more of the local investors. And when you talk about the local investors, some people think the local investors are really the retail investors. Most of the local investors are essential investors, high net investors. The retail investors seems to be losing out gradually by the day.
But is this a seasonal thing? It's school fees time, summer, a lot of people have spent. Do you think that perhaps after the school fees payment, we'll have better sentiment?
People might come up with that slogan, but I don't think really. I mean, over time, this time is always a time whereby investors sit back, re-strategize, especially looking at which stock do you want to be with after seeing the half-year results. Maybe in banks that are paying interim dividends, you want to key in banks that are or companies that have released half-year results. You want to look at the future. What are the plans? So that's why you see sometimes those drawback. When you talk about school fees, summer, for summer is the high net investors. For school fees, the retail investors. And as it stands, as we are now, I mean, a lot of retail investors are trying to exit the market, trying to, like you said, looking for what to eat. There was a data that came out from CBN over the week that said that three items seems to choke up about 80% of wealth in Nigeria. They talked about education, they talked about food, and they also talked about transportation. So nobody's talking about investors. And when you look investment, and when you look at that, it's mostly tied to the retail investors.
So help us to understand now, before President Bola Tinubu was declared winner of the election, the market was very friendly with all front runners. So we saw a surge, especially at the stock exchange, when President Bola Tinubu got into office. I mean, I think last year we were one of the best. And now we're seeing a tapering. Is it because of the reforms? Have the sentiment towards the president changed, or what really?
I think it's two things. The sentiment. Everybody believed that he was coming on with the magic words. To turn around the economy. His antecedent of being governor, a capitalist to the core. So people expected his policies that will come in, would drive the market, and people, when he came up with that policy, that would that call it famous or infamous statement? Subsidy is gone. Everybody say, well, finally the reform has started. Then along the line, people begin to see that, oh, look, there seems to be a drawback, policy somersault here and there. Today is this, tomorrow is this, especially from the monetary side. CBN is giving cash to bureau de change today. Tomorrow is no more selling cash. Tomorrow is, there was so much policy somersault. So a lot of investors began to say, look, they seems not have gotten their act together. So that was one. Then in terms of sentiment towards him, people feel that his policy does not have a human face, especially they are not looking at the bottom end. If you look at the policy that they have driven, that have really moved the stock market today, it's mostly policy that has to do with floating of the naira and also removal of subsidy. And when you look at that, how many Nigerians are really in the stock market? So most of his policy tend to favor those that have liquidity. Those people that already have liquidity. Doesn't seem to favor new entrants into the market. So what you're seeing, you're not seeing new entrants. So a lot, that's why you seem to be slowed down, especially with the recent pronouncement that, oh, coming from NNPC, we've been paying subsidy over somewhere, and people is like, oh, we thought subsidy is gone. So those policy somersault that you see either from the monetary side or from the physical side, it's not doing the market any good.
Yeah, but the administration also has some things to boast about. For instance, the convergence of in the FX market between the parallel and the official market. We've seen that space reduce. We've seen inflation taper one way or the other. One way or the other, taper. That might be counted. I mean, that might be counted as some of the benefits of the reform.
When people say that, sometimes I say, okay, fantastic, you've done that. What are the impact? You came in, exchange was 760. You tried you moved the rate. At a point, it was 960. It's the first time we've seen that the official market was trying to catch up with the parallel market. Normally is the parallel market trying to come back to the official market. They moved it to 1,400 at that time from 960. And you saw the crisis that got it to 1,900. They intervened again. We saw it came down to 1,300. People say, wow, we are going to get hit 1,000. And we saw them slow down again, and now we are hovering between 1,600. And they came back again. Oh, beautiful change. We give you money now. We saw it nice coming down to 1,580. So it's neither here nor there. When you look at some of these policy, or that has it really impacted? Fine, yes. In some of these things they're trying to converse, but again, your conversion, what is it doing to the larger economy? Inflation definitely. They know I keep saying it, the key to Nigerian inflation approach is stabilize the exchange rate. If you stabilize the exchange rate, it's like you are using one stone to kill two birds. Stabilize the exchange rate. Cost of food will come down. Cost of commodity will come down because our economy depends so much on importation. And when you have tariff today at 1.6, tomorrow at 1.7, it doesn't really help even the businesses. So stabilize the exchange rate. You see, inflation will come down. Nigerian inflation is not driven by so much liquidity in the system. In short, when you remove liquidity in the system, you are killing one of the most vibrant sectors in the Nigerian economy, which is the informal sector. So what you need to do is stabilize the exchange rate. Then you see price will moderate, and then demand and supply will come into play. So all this game of remove liquidity, hike the rate, is killing those informal sectors. So for me, the two policies are good. When you talk about reduction in inflation, now with the recent increment in fuel price, are we going to see those reduction that we're all planning to see? Is CBN going to meet the Monetary Policy Committee? Are they going to cut rates that we expect? I hope it's being dashed with current events.
But we're counting down to U.S. rate cuts, so perhaps that will pave the way.
U.S. rate cut will definitely not be to our advantage, because again, with a U.S. rate cut, the foreign direct investors that you normally want to come to Nigeria would definitely not want to come, because that means their investment in their own place will be very stable. They'll make better returns. Inflation is already coming down, so it's not going to be to our advantage when you have that rate cut.
But it will be to our advantage in debt servicing.
Well, when you talk about debt servicing, fantastic. But again, those are debt services. We are still battling on how much debt are we owing, how much are we really paying, are we still borrowing, are we not still borrowing? So that's the major challenge. Nigerian problem as it stands now is for this administration to do just two things. One, try to see how you can fight inflation by going to the core what is really the core issue of inflation.
I guess that'll be the fiscal authority.
There's a fiscal authority, because it's a situation whereby you're talking about, okay, give an example of Dangote refinery. You're saying Dangote refinery can actually have a fixed rate in terms of exchange rate. Then you are saying you fix it, you're paying naira. Then you say people that are bringing goods that are going to be consumed by 80% of Nigeria, you say willing buyer, willing sellers. You said, okay, you'll be in a reduction in terms of food importation tariff 2 months after. They're still waiting for a memo from the Ministry of Finance to say which item and which item. This was a statement that was made over 2 months ago. These are part of what investors are looking at. You make a statement, then you come to the bottleneck, you come to the implementation. You are looking from a memo from Mr. President. You are from Mr. President, the Ministry of Finance is looking towards the presidency to give them wage goods. And so it's chaotic. So when we make a statement and you say, this is what you want, you have to do, immediately you are now going in there and doing that. Then you would have seen now 2 months after. So by the time you say, okay, it's time for us to implement that, you will not see the effect, because by now we're supposed to begin to see the effect, because the effect is not going to come up immediately you remove that tariff. It's going to take a while, because a lot of people have imported goods at the former previous tariff. So you are supposed to see a slowdown, but by now we're supposed to say, okay, finally we're beginning to see the impact. Now 2 months, no action. Then you do the action maybe later on this month. You have 2 months to get it stabilized. 2 months after, you say 6 months is over. So we are back to where we are.
So is this what we call the policy inconsistency?
It's policy inconsistency. Then it has to do with the bureaucracy. We have too much bureaucracy. Remember, there's a presidential advisory committee that was supposed to be here for 6 months, giving the president gave them 6 months to turn around the economy. That's that committee. We are still there waiting for them to turn around the economy. They also have the economic recovery team that Mr. President has. So there's a lot of committees.
You know, we have a bigger one where you have the big names, the Dangote.
That's the economic. Yes, he gave them. He said in 6 months' time, and Dangote came up said it's not rocket science. And remember, I mainly said that it's not rocket science. That was the first time the CBN agreed to give FX to bureau de change, and we saw that movement to about 1,300. After that, the CBN came and said, "Look, we are going to revoke some licenses." Well, so it's chaotic. It seems to say this thing, and it seems to be working. Then you go back, and then when the heat is on again, you come in to try to intervene. Now we see it got to 1,600 people saying, "Oh, we might get to that 2,000." The CBN come, okay, bureau de change, come, we'll give you $20,000. Those are not.
So what do you think would be a more sustainable way to handle the issue of especially our FX?
I think the CBN, you see, when you use administrative method in trying to take a problem, there's a limit to what an administrative methods will go. You revoke license, those are administrative methods. You look at people that are doing infringement, those are administrative methods. What you need to do is the demand side, the demand and the supply side. How much of it can you make? Now, I would have been very excited. The Dangote refinery is here. It's going to bring down 40% of our FS if the data is right. But unfortunately, we are still talking about lifting or not lifting. So it's a big challenge. So what do we need to stabilize it? We need to attract more inflow. We'll do the 500 million bond for that. We call it indigenous bond. That is fantastic. But 500 million added to our reserve is just like a drop of water in an ocean. So what product are they coming for? To attract Nigeria and the diaspora, to bring in the FX. Those are the people that are ready to come in, and the foreign direct investors, foreign potential investors are not going to be here for a long.
Our president just came back from China. A lot of MOUs were signed. Look,
let's not go into MOUs. The president went to Saudi Arabia. The president went to United Emirates. The president have traveled so wide to bring in investors, floating the naira, attracting investors.
But multinationals are leaving the country.
But again, people are still living.
Multinationals are leaving the country.
When the president was busy going to attract investment, Total was planning to invest in Nigeria, and they took the investment to Angola. I mean, so there's a lot of things that happen. Then the Minister for State for Petroleum said that there's going to be about, I think at that time I was saying about $12 billion that's coming in from investment after we lost the so-called Total Energy deal to Angola. Up to this moment, no. So what we see is, it seems to be that there is always politicking in Nigerian economy. When you see, when it looks like the people are not satisfied, then the politicians take over. You don't play politics with your economy. You don't play politics with your security. I heard I read this analogy from Reverend Matthew Kuka. He said they asked a young lady, are you in APC? Are you in Labour Party? Are you in PDP? The answer he said is that I'm hungry. Hunger does not take to any party. So economic decisions should not be dependent on politicals, maybe it's political correct or political not correct. No, that shouldn't be our. We should come up with a strategy. You say the problem in Nigeria, we have not had a common vision on how to drive our economy, whereby each successive administration will come up and improve upon it. We always have a fire brigade. That's why we're so confident that President Tinubu, with his antecedent, is going to come up with a policy that will drive it. But I think they were so much in a haste to come up with some policy without putting the foundation. And I said it way, it's not bad. You can build your castle on the air, and it seems like you want to, then you can start putting up the foundation. We have built so much castle on the air now. To put in the foundation is becoming a serious challenge to this administration.
It's too early to be harsh on the president.
You see, they're saying that in local palace, they say the food that will be so sweet is from when they start preparing it, that you start to feel the aroma. So as it stands now, from the food where we are seeing, it's not looking so good. Especially the policies are fantastic policies, but there seems to be a lack of synergy, then a lack of thought through process. So when the storm comes, because you didn't thought through it, you panic. That's the problem. There seems to be panic. Once a policy is in there and it looks like it's going to drive the currency to a particular, they panic. That means it's not a clear cut. Let me give you an instance. I've said it before now. Whether you remove, you float the naira, that was not why the naira exchange rate was going down. Why the naira was going down was in the area of demand. It was in the area of liquidity. So whether you float the naira, and you float the naira, you don't attract liquidity, the naira will continue to go down because that's the root problem of the challenge. So the problem we have is that we don't seem to address the foundational problem of our issue. We try to see how can we go it, and we're so much fire brigade approach. We are not, and then the stakeholders are not carried along. The stakeholders are not carried along, like in the financial sector. How much time do the CBN, I don't know, maybe interact with the banks managers, the CEOs?
But those interactions, don't they hold with the central bank and all of that?
No, then later we see them hold the monetary policy committee meeting, and it seems to be like, sometimes you ask, look, when you have the monetary policy committee meeting, I'm sure they should have discussed about the windfall tax. But when that announcement was made, it came like a shock to all of them.
Especially when it was moved from 50 to 70%. I think that came from the lawmakers.
Well, let's leave our lawmakers. I think, fortunately, we have some good people in the lawmaking house. I mean, former MDs of a bank like Tokumbo and Firu, who's heading that. So sometimes you just wonder what really went wrong. If you are part of the system, you should know what to do and how to go about it. The only positivity in Nigerian economy, the only global player we have in Nigerian economy, as it stands today, is the financial sector. Why are we always trying to put so much pressure on that sector? Like if that sector is the one eating up Nigeria. That for me is a challenge. When the CBN came in, the current management of CBN came in, they came in like with a big stick that, oh, now we are here to deal with these banks. You banks, you have been doing infringement. Oh, no, that's not it. You need to call them. You need to look at them. You need to say, how can we work together? Especially when you were dealing with a very, very serious issue like FX. And you and I know that some of these banks have load of FX offshore. Why is it so difficult for us to liberalize that FX market, whereby the banks also could be a big player? Why is it so difficult? It's just the same thing that is happening. Why is it so difficult for us to liberalize the petroleum? Why is it so difficult for us to tell NNPC, come to the market, become a private company, let's run you like we run LNG? Why?
I think that was a sensitive one, the one you talked about NNPC, because we had that promise years ago, but we're yet to see them in the market. And a lot of people have said a lot of the things that the country is going through is because of the runnings or the workings in the NNPC.
NNPC is the cash cow of Nigerian economy. As an investor, having seen those results from NNPC, will I be ready to invest in NNPC? As I stand now, definitely no. There's no corporate governance. There's no accountability. So you need to bring, today you made 3 point something million trillion. Next day you are telling us that you might even go, you are broke. It could be difficult for you to. So you can't join it together. Now the only way you can look at LNG. I keep saying that was not initiated by the military, by civilian. It was initiated by the military regime of President Ibrahim Babangida. Till today, that remains the most successful oil industry, because what do the government is out of it? What do? You just pay them dividends. So we should begin to think of NNPC is our cash cow. Fantastic. Why is Saudi Arabia Aramco doing very well? We need to study. What we need to bring corporate governance, and that will be our goal.
All right. Thank you so much, Mr. Mukta Mohammed, for your time. And NPC have received a lot of knocks, especially now when Dangote Petrol is waiting to be offloaded. I think our eyes are there. But thank you so much for your time and sharing your views with us this morning.
My pleasure always to be with you.
All right, now for our DSTV viewers, we have to head to Edo State now. We know we are counting down to the election in that state. So there's an Edo Peace and Security Summit holding at Benin City right there. And for our DSTV viewers, you'll be going that way. But for the other platforms, let's now head back to the Sunrise Daily Studio.